Hey up, testies. Just got to knock one out from my sofa at home, as it were. So I just want to give you a little bit of insight into futures. So if I tap the finance icon there, the Yahoo finance icon, and then markets at the bottom in the middle there, we can just see what's happening in Asia or in Europe, etc. But what I sometimes like to do, I just sort of scroll down, and I think this is just here by default in the commodities section. You can see the futures. Okay, so we got the futures there for crude or Brent crude oil and for silver for March. So it's just gives you an indication of maybe the direction that, say, oil or silver is going to head when the market opens. So it's just a useful little indicator to help me to decide on my trades in those things. So let's get into the trading app, and I'm going to knock one out in USO. I think people might be quite familiar with the idea about selling cash secured puts. Hopefully that's the main purpose of the first few weeks or so, but I just want to show you something a little bit different in the options chain. So we're still going to make the first decision on the expiration, so just slide across here till I find something between 40 and 50 days. I could choose either the March 22nd or the March 29th. It's no real big deal. And with USO trading at $11.04, I'm just going to try and select this annotation tool. I'm going to choose the 10 strike, but I'm also going to do something at the 12 strike. So I'm going to be selling premium either side of the 11.04 price. So traditionally we sell puts, okay, and we sell at the bid. Okay, so the bid price here is going to be 0.14. All right, so I've got to tap that to make it turn red for it to be a sell. If I tap the 0.15, it will go blue, and that will be a buy order. So we just need to get that right. So 0.14 gives us the sell. But I'm also going to add in another leg to this. I'm going to sell the call on the other side. So we're selling a call here, and I'm going to sell it at the 12 strike. Okay, it's like the mirror image of what we do with the puts, but there's an obligation to sell on this side. Okay, it'll be a bit confusing to start with, but as ever, you'll get the idea when you've seen it a few times. So now I've got two legs where I'm collecting premium on both sides, and I basically want USO to stay between 10 and 12 between now and that expiration. If it stays between 10 and 12, then I collect all of this premium. If it doesn't, then I've got some obligations to follow up on, and that's the next stage in the strategy. So I'm going to tap the strategy button down here, because when you've got multiple legs, the app identifies it as a more complicated strategy, and you can build various strategies in the strategy builder. So just check it. I'm selling those puts there, selling those puts there, all good. I'm going to hit order and go through. And this is, excuse me, this is given the interesting name of a short strangle. Okay, we don't need to worry too much about those things. But anyway, I'm going to crank this up to 10 contracts just to scale up my order. And with this sort of short strangle trading between negative 0.032, 0.29, I'm just going to take my my price down to that 0.030, tap that button at the bottom, and we can see that I'm going to be collecting $300 US. Okay, so I'm going to slide to submit that sell now. Okay, it's just another type of trade that we can use to collect a little bit more premium. It will, as usual, appear a little bit confusing to start with, but we'll all get there in the end. Okay, bye for now.